Hello students, today in your theory of GST, we'll be looking into the case of interstate supply of goods and services, that is sale from one state to another state. Outside this state, we can say a trader from UP is purchasing goods from Bihar or selling goods to a trader in Gujarat. So when we have a purchase of goods, we debit the purchase account because that is nominal account and expense has to be debited. We debit the input IGST even though we are paying some GST at the time of purchase. This is not our expense. This is an asset which we can set off or which we can recover it back at the time of sale. To bank if we are purchasing through check, to cash if we are purchasing by cash payment, or to creditors or the name of the supplier or the creditor if we are purchasing on credit. So here, instead of in the previous questions we used to write the CGST, but since this is a interstate or from one state to another, instead of CGST we are going to write, and SGST we are going to write IGST. Now if in your question your CGST is 6% and your SGST is also 6%, then after adding this, the 12% will become your IGST. So for the sale, we are debiting the bank account if we are receiving check, debtors account if we are selling on credit to our customers, the name of the debtor or customer, or cash account if we are receiving cash, to sales account, to output IGST. Now in this, when we are selling goods, we are collecting the IGST at the time of sale, and this is IGST is charged when we have the interstate or sale and purchase is done outside the state. Now next we have here is the purchase of assets. So if the purchase of asset is done outside the state, then we write asset account debit because what comes in real account has to be debited. Then we have got the input IGST account because we are purchasing asset, we have to pay some GST with the purchase of asset. We are not considering this as expense, we are considering this as asset because it will be recovered back when we collect money or when we sell the asset. To bank account debit if through check, to cash account if on cash payment, to the name of the supplier from whom we have taken the asset if it is purchased on credit. For expense incurred outside the state, whenever expense is incurred we have to include our GST. So if it is outside the state, we will add input IGST, debit the expense and debit the input IGST. To bank if it is paid by check, to cash if it is paid on cash, and the fifth one here is for income earned from outside the state. So if we are receiving check, we'll debit the bank account. If cash, we will debit the cash account. To income account, whatever income we have received from outside the state, we will credit, and along with that we will even collect the output IGST with the income earned. So this is in the case of interstate supply of goods and services, that is sale from one state to another state. So instead of separately CGST and SGST, we have to charge IGST. Now in the question you have to be very careful while reading that this is within the state or outside the state. If within the state, then we'll charge separate CGST, separate SGST. If outside the state, then we will charge adding both as IGST. Now we'll look into the adjustment of IGST and SGST and CGST. With effect from 1st February 2019, there is a change in the adjustment of IGST. Before 1st February 2019, it was as follows. Output IGST was adjusted against input IGST. Output CGST was adjusted against input CGST. Output SGST was adjusted against input SGST. So here the IGST was separately adjusted with IGST, output with input. Output CGST was separately adjusted with input CGST, and output SGST was separately adjusted with input SGST. Thereafter, excess of input IGST or expense of output IGST was adjusted against remaining amount of CGST, and the balance, if any, was applied to set of SGST. So if we have any excess of input IGST means while purchasing, if we have paid any excess IGST, that excess of input IGST or output IGST will be adjusted against the CGST, and if there is any balance, then we will adjust with the SGST, that is state. However, now with the effect from 1st February 2019, set of mechanism will be as follows. So from your 1st February 2019, your set of mechanism will be as follows. First of all, the output IGST will be adjusted against input IGST. So if you have any of the excess or the first journal entry will be your output IGST will be adjusted with the input IGST. Now let us see case number 1. So in this case number 1, it says if input IGST exceeds output IGST. Now what is input IGST? When we purchase, we pay some GST along with the purchase, or when we pay some expense. Along with the expense, we pay some IGST when we incur expense outside the state, or when we purchase assets from outside the state, or when we purchase goods from outside the state, we write down the IGST, input IGST. Now if input IGST exceeds output IGST, that means the amount that we have paid is excess to the amount that we have collected at the time of sale. So in that case, the first step will be this: output IGST to input IGST. Now if suppose your output IGST is, let us say, 10,000, but your input IGST is, let us say, 20,000. So this is your output, that means the collection came as 10,000, but your input is only 20,000. So first we will adjust your collection. So output IGST to input IGST will be 10,000 and 10,000. Now the remaining 10,000 will be adjusted with CGST, which I have done in the numericals, where you will understand. So whatever remaining now is left, what we will do is we will adjust with the if input IGST exceeds output IGST, in such a situation, excess of input IGST will be first adjusted against output CGST, and the balance, if any, will be set off against output SGST. Now this particular journal entry is been separated when the numerical is been done, for you to understand it in more easy way. If full amount of output CGST has not been adjusted against input IGST, then the remaining amount of output CGST will be adjusted against input CGST and the balance will be paid off. So if full amount of output CGST, now the remaining input IGST has to be adjusted with the output CGST. But if the full amount of CGST is not adjusted with input IGST, then the remaining will be adjusted and the balance will be paid off. This also you will understand when you will see the numericals. Similarly, amount of output SGST will be adjusted against input SGST and the balance will be paid off. So the IGST will be adjusted with the output IGST will be adjusted with the input IGST. Output is your receiving, input is your collection. So what amount you have received, you have to adjust with your input. Then if there is any amount left with the CGST, and if CGST is able to if you're able to adjust the complete amount with the CGST, then you will adjust with it, and if not, the balance will be paid off, and then again the remaining will be adjusted with SGST, and then the final balance will be paid off. Case 2. If output IGST exceeds input IGST. Now here what is happening? Your output, okay, is exceeding the input. Now what is your output? Output is your collection. So your collection is becoming more than the payment. Like here your output, let us say, is 20,000 and your input is 10,000. That means you had paid 10,000 at the time of purchase, but now you're collecting 20,000. That means your 10,000 is the excess liability that you have to pay to the government. Now at the time of sale, what you have collected is your output IGST. In such situation, first of all, entry of adjusting IGST will be passed. So first we will adjust the output IGST to input IGST. Thereafter, input CGST will be adjusted against output CGST. Input SGST will be adjusted against output SGST. So first we are going to adjust the output IGST to input IGST, then we will adjust output CGST to input CGST, output SGST to input SGST. Thereafter, excess of output IGST will be first adjusted against input CGST, and the balance, if any, will be applied to input SGST. The entry will be output IGST account debit to input CGST to input SGST to bank account. So if there is any of the excess output IGST, that means excess of collection, after adjusting with the input, if there is any excess, it will be adjusted with input CGST, and if there is still remaining some output IGST, it will be adjusted with input SGST, and if it is still remaining, then the balance will go to the bank account. Now I have done the numerical for this case. If input IGST exceeds the input, if input IGST exceeds the output IGST. The numerical for case 2 will be done later on. I will do later on. I'll explain this later on with the numerical. Now, before we end this, there is some important things to note down. GST is not levied on the amount introduced into the business by the proprietor as capital. So when you're investing capital, you don't charge GST. When amount is withdrawn by the proprietor for personal use, drawings, we don't charge GST. Amount deposited in the bank, when you deposit money or withdraw from the bank, the GST is not levied. Amount paid to creditors and discount received. So on the discount received and the amount that you paid to the creditors, they cannot charge GST. Amount received from the debtors and discount allowed. So here also the GST is not charged or levied. Bad debts written off and bad debts recovered. So what is bad debts? When your debtor is not able to pay you the amount, a certain amount that you were supposed to receive for the goods that you had sold, we don't charge GST. And when we recover the bad debts, that means all of a sudden from somewhere we recover the money that we thought we will never recover, bad debts recovered will not be, GST will not be charged. Wages and salary, electricity and water bill and traveling expenses. So when you make the journal entry, you keep a note of this, that these will not be charged with the GST. So I have done numerical on case 1. Case 2 numerical will do very soon. So keep following the class so that you will be updated.